Let's look at the chart. The market is currently riding a strong bullish trend, but pay close attention to where price is getting stuck right now. According to my analysis, the market could reach this zone today. Smart money continues to dictate strong expansion on the GER40 H1 chart, leaving retail participants questioning whether to chase momentum or wait for proper positioning. Professional market operators monitor dynamic conditions across global sessions to avoid traps and maximize efficiency. This is an educational video, not investment advice. Examining the macroeconomic and technical landscape, market structure remains exceptionally bullish. Price action has consistently printed higher highs and higher lows, validated by multiple aggressive bullish breaks of structure. Smart money accumulation phases are clearly visible, followed by rapid displacement into price discovery above previous swing highs. There are no structural shifts indicating a bearish reversal on the primary timeframe yet. However, chasing extended candles at current pricing introduces unnecessary risk. Instead, institutional participants look for engineered pullbacks into premium discount arrays, while maintaining strict risk controls. Our focus is on this entry zone situated between 25,520 and 25,600. We are waiting for mitigation here. Once price action confirms lower timeframe rejection, we can expect the expansion phase to resume cleanly. Our invalidation level is strictly set at 25,300. If price breaks this threshold, our bias changes and invalidates the primary structural framework completely, forcing market participants to reassess upcoming directional biases and tactical adjustments. Scenario 1 focuses on the primary bullish continuation. Following successful mitigation within our primary demand zone, institutional participation will target liquidity pools overhead. T1 is established at 26,450, clearing immediate resting liquidity. T2 extends toward 26,650, capturing secondary expansion objectives. T3 is targeted at 26,850, with an extended psychological objective at 27,000, ensuring complete alignment with overarching trend dynamics and multi-timeframe liquidity sweeps. Scenario 2 outlines our countertrend framework. Should price sweep extreme liquidity highs into the 26,400 to 26,500 zone and print a bearish change of character on lower timeframes, institutional distribution may take temporary control. Our invalidation level for this short-term reversal is placed at 26,580. Downside objectives for this alternative scenario include T1 at 26,000, T2 at 25,600, and T3 at 25,350. Clearing underlying sell-side liquidity pools before major structural demand re-engagement occurs across global sessions. Patience remains the core edge in institutional trading. Allow price to deliver the required signatures before committing capital. Follow for more. The next analysis is coming very soon.